And welcome to virtual classes organized by Board of Studies of the Institute of Chartered Accountants of India for intermediate level paper 7B strategic management. I am Anand Saxena and I am going to conduct this final session on strategy implementation and control. In the last session that we had, I had covered until strategy control, although I'll be revising these a bit and so as to establish connection with whatever we are doing today. And I had said that this first element of this particular chapter, that is the interrelationship between strategy formulation and implementation, is key and is pivot. And in fact, I had rooted it to the very meaning of strategy itself, wherein we had talked about strategy as a integrated, unified, and comprehensive plan. So in today's session, therefore, our focus is going to be on strategy audit onwards. Although, as I said, this rigid compartmentation of topics is not possible in a cyclical concept such as strategy management. However, our focus will be on these topics. We'll be going back and forth to the other aspects of strategic management as well. We had talked about strategic change versus strategic transformation. There was a question on the group also. Not every change is transformational, right? So the change can be, variously, kind of dichotomized or categorized: incremental change, radical change, right? And piecemeal change and holistic change. When the change is holistic and radical, that attains transformational proposition. So with this observation, we'll be moving to this important slide, which describes types of change into four types, namely starting from northwest to southeast. So evolution, adaptation, revolution, and reconstruction. And as you can see that the what you call eastern quadrants, whether northeastern or southeastern quadrants, they are pointing towards transformation nature of strategic change. So therefore, again, it is a matter. I always say it is no point making definitions more precise than the subject matter, but definitely transformation is like overhauling of engine in an automobile, right? Wherein we are not tinkering with the gears or the gearbox or with the braking system or with the fuel transmission or something like that. We are looking at the whole, and we are kind of bringing up changes that are rather radical, and they will be, everlasting until the next episode of transformational change. That's the point that we need to understand while understanding the difference between strategic change and transformation. And of course, it is in this context that we had talked about these 5 R's of organizational transformation in our last session. And, usually, for example, these 20 years of Jack Welch of GE, are regarded as probably the strongest evidence of transformational leadership and organizational transformation or transformational change in GE that brought about a radical improvement in the market capitalization of this particular company. So, and as you can see, that the change that Jack Welch brought about, is transformational in the sense it touched the vision of the company. It aimed at bringing about a change in the organizational culture to achieve the vision. It pertained to flattening of the organizational structure delayering it and making it more agile and eliminate bureaucracy. And it was about at the people level empowerment and you know uh, resulting into a kind of a boundaryless organization. So when the change is so widespread and pervasive, and as I said, is going to be kind of long lasting, then this change acquires the proportions of a transformation. So I hope this understanding of and so strategy per se, therefore, when we say strategy is a non-recurring decision, it brings about a commitment from the organization, usually of very large proportions. So all these indications in the definition of the strategy itself are indicative of transformational impact that a strategy is likely to have on the future and the fate of the organization. So, with this, I will be, and then of course, strategy control. This is taken from your book. If there are any questions, I will take questions on strategy control. Otherwise, I'll move on. But I must emphasize one thing, especially with respect to strategy control. That is, we need to distinguish between control versus controls, right? The controls, in a way, pertain the techniques of control that we use. And here I wish to emphasize, again, in sync with the definition of strategy as a comprehensive, integrated, kind of plan, that the idea of more holistic controls is more in sync with strategy control. So, and such measures as balanced scorecard, for example, Kaplan's balanced scorecard, wherein you look at the company's performance not only from the point of view of the investors, but also the customers and also the suppliers and society at large and so on. So various stakeholders. So this is in sync with Freeman's stakeholder theory. So from shareholders' perspective to stakeholder perspective, when our performance canvas is broad-based, I think that's where the idea of strategy control kind of fits in. And if you care to go through the slide here carefully, and wherein I have put two observations under "Did you know?" Our learning campaign, that integrated reporting framework. I'm sure accounting is your core area. By now, you would have done a course in financial accounting and reporting. You would have seen that integrated financial reporting framework recognizes, for example, 6 types of capital. And reporting is on all the 4, the 6 types: financial capital, manufactured capital, intellectual capital, human capital, social and relationship capital, and natural capital. And that's where strategy enables the firm for a sustainable, kind of a performance. This idea of holistic controls, I have talked about balanced scorecard, of course, and now the integrated reporting. QBL, quadruple bottom line, and that takes the reporting, financial reporting, beyond the realms of the conventional bottom line of net profit or appropriation of net profit to people, planet, and corporate purpose. So therefore, strategic control therefore assumes that overarching, kind of a proposition, wherein an attempt is made to examine how far or close we are to the realization of our vision, whether we are on course or drifting from our mission, right? So, therefore, to my mind, uh, we need to understand, and I have been repeatedly saying right from my first interaction with you on 2nd September, that Gulak and George's definition we have to keep in mind while talking anything about strategy or strategic management for that matter. Now, as I said, in today's session, my focus is going to be on strategy audit and then business process reengineering, which I refer to as strategy process reengineering, with reference to you know our concerns here in this particular chapter. And I'll also be talking about benchmarking, and uh, and I will be presenting an integrated kind of understanding and analysis of uh, of this. Okay. Now, this is the content which is taken from your on your study, Rumelt's criteria of consistency, consonance, physics, and advantage, and all these concepts will become alive when we move along. I have designed especially 4 5 slides on this strategy audit because it is a relatively uh, neglected and of late relegated topic in the strategic management. So one does not hear much on strategy audit in this sense. In fact, now probably more fashionable or more in is the concept of governance audit. So, and I believe that strategy audit is inherent to the governance audit also. So, therefore, my next, I think, half an hour or so will be devoted to a discussion of strategy audit. Now, look at this process of strategy audit. This process figure is not from your study material, if I remember correctly. I have drawn it from elsewhere. But as you can see, and this audit is, where does the audit begin from? Although again the sequence, but the audit begins with the stakeholder expectations. It begins with what is the current state of affairs and whether the way we are doing the things is going to lead us to our vision and mission, right? And what initiatives and activities we have undertaken, how well are these kind of going. This feedback and approval again is a governance kind of a construction, because you know that the relationship between governance and management is such that management makes a decision proposal and the board of director ratifies it. Management implements that decision and the board of director monitors it. So this strategy proposal and then strategy approval and then strategy implementation and then strategy observation, or what you call monitoring, these are governance functions, right, in the course of the implementation of strategy. And as you can see that the whole process derives a kind of a informational informational economics kind of meaning, wherein there is a lot of emphasis on measurement and reporting, and of course comparison with the strategy. Benchmarking comes in because it is not only comparing my performance against my standards, but probably with the industry's best. Is it not? So, to my mind, this slide is important for you to kind of internalize. You can take a screenshot of this, put in your phone, and kind of mull over it. In terms of the meaning of strategy audit. Moving on, I'll come to these slides a little later. Um, just a minute. I'll go take you back to my earlier slides, and then just a minute. Just a minute. And I will establish a very important relationship because it is in sync with what we are doing right now. This is the slide that we had talked about, is it not? So, and I will be kind of reinterpreting this slide that I discussed yesterday in the context of what strategic audit, right? Just a minute, if I can access it. Yeah. Yes, this is the one that I was talking about. So in a way, I can define strategic audit as the audit of the context, the process, and the content of strategic management with an enterprise with a view to ensuring that our performance is comparable to the best in class. So in a way, I have given you a very comprehensive definition of strategy audit, which is in sync with my very first, intervention on 2nd September in terms of looking at strategic management with reference to context, process, and content. In fact, one can go on, for hours on, elaborating these, concepts, and I think even at the cost of repetition, I will be, talking on this. I would not call Mansha it as a last, kind of a step, in strategic management. As I have been saying that, these stages or steps are, for the sake of, for the convenience of understanding the process. Everything is happening simultaneously, right? And yes, with respect to audit, we can say that it could be what you call discrete. It may not be as continuous, as other aspects of strategic control. It may be periodic audit because we wish to ascertain whether we are on track or not. But for the moment, I think let us concentrate on this definition which I am proposing for strategy audit. It is a very radical definition, and it is a definition that encapsulates the idea of strategy audit for sure. And this idea is inherent and central to the very idea of strategy itself, as a unified, comprehensive, and integrated plan. So, what is the definition, therefore? Strategy audit is the audit of the context, the process, and the content of strategic management within an enterprise with a view to ensuring that the performance corresponds to the best in class. Because objective of strategy is to enable you to attain superlative performance better than others. Average performance, anyways, you are making, is it not? It is to transcend your performance beyond the average and bring about a above average return or supernormal kind of performance. And therefore, and now when you will read your chapter now, that will make a bigger and better sense to you, because now you will be able to figure out that strategy audit includes both external analysis as well as internal analysis. And this again goes back to our basic definition of strategy. That strategy links the firm's internal strengths and weaknesses to organizational opportunities and threats. So, it is important. And what I have done is that to make certain emphasis, clear that, for example, we talk about auditor's report, to whom it is addressed. We will say it is addressed to the shareholders primarily because this is how the auditor's report is addressed. For whom it is meant? It is meant for the stakeholders, right? So, therefore, I would pitch a strategy audit at the stakeholders, right? Even in the broader sense of the political, economic, social, technological, legal, and ecological environmental aspects. This audit will include an audit of organizational resources and competencies. Now, because this audit will tell you about the organizational capabilities. Suppose my machinery, my plant and machinery is old, and that's why a strategic audit may not be, a normal chartered accountant may not be able to conduct this particular audit. Because if your obsession is only with accountancy and not with the whole business, you will not be able to conduct this strategy audit. For example, as I was talking about, the technology which the organization is using or the machines that the organizations are using, they have gone obsolete. No accounting measures the obsolescence. I mean to say, you can calculate the depreciation figure. That's a different issue. But you cannot calculate the obsolescence, because this obsolescence will jeopardize your competence and competitiveness. So this audit will include an assessment or an examination of how up to date are your resources. Technology is one, human resources the another. We have just talked about the 6 types of human capitals which IFR talks about. Now the question is, are you capable of measuring and reporting on those? And therefore, the role of chartered accountant and the importance of this paper for chartered accountants is a must, because it must, bring you to terms with the fact that a mere awareness of financial and taxation matters is not going to catapult you to business consulting, and strategy audit, and so on and so forth. One needs to understand or develop the understanding of the entire business and the context in which the business operates. So, the audit of the context, the audit of the process. So the strategy audit has to ensure or to follow up not only the implementation, or controlling for that matter, it has to also ensure whether our strategy formulation is okay. We have just done a matrix correlating strategy formulation and strategy implementation. And we have, how do we decide whether our strategy formulation was, kind of good? This observation can come from a strategy audit, an audit by an expert in strategic management. So I hope the second aspect of the definition of strategy audit with respect to the process is clear. Third is equally important. This audit is also about the content. Can we have the fan please on this? also need to kind of understand that strategy audit also examines the content of the strategy. Yesterday, we took up various instances of strategy failure, wherein, for example, reckless growth, compromise with the future and the fate of the organization. So, strategy audit has to, kind of question the content of the strategies itself. And to elaborate it even further, within this diagram, again, this is a very important infographic that I have prepared, and I have taken special care to prepare this because I will simply put these arrows in every slide and say that, okay, content, process, and content matters. And I will presume that, okay, I am conveying the idea to you. But here and now, I am emphasizing that how my basic understanding of strategy as context, process, and content matters at every stage. So I have to look at the content of the strategies, whether my retrenchment strategies are in order. For example, public sector retrenchment strategies have been questioned, wherein public sector assets have been sold at throwaway prices to the private sector counterparts. I have to retrench when I am examining and pursuing retrenchment as a strategy. I have to really see, and that's why you see, how this corporate sector fought tooth and nail and ensured that in the insolvency and bankruptcy, for example, code, they allowed the corporates to buy back their assets. Is it not very strange? I declare myself insolvent, right? And I allow the insolvency and bankruptcy professionals to liquidate my assets. And I am myself buying those liquidated assets at a discounted rate. So I have, conveniently gone it bankrupt, and I am coming back as a going concern by buying those assets, kind of at a discounted price to continue as a going concern. Context, Saikat, please, again, this has been the basic, the building block of my presentation. Context is the environment, internal environment and external environment. Process, the strategic management process is the stages in planning, implementation, and controlling. And content is what goes on. For example, when I say strategy formulation at corporate level, then what is the content of that strategy formulation? We have seen that my corporate level strategies can be growth, stability, and retrenchment. And business level, my strategy can be cost, leadership, and differentiation. So what I am saying now is this, that strategy audit is the systematic examination of a thorough examination of the context, process, and content of strategy management within an enterprise, and it is not needed for its own sake, with a view to ensuring that performance conforms to the best in class. So it's a very comprehensive definition that I have designed for you, and it is in sync with the very definition of strategy given by Bullock and George, and this context, process, and content emphasis that I have been repeatedly, making in the course of all my deliberations with you. And this also gives you, a consistency of theme that, whatever I am going to do in strategy, I have always to keep in mind context, process, and content. I hope I am clear on this. Okay. Now, it's again the efficiency, the repetition of that part, that planning, implementation, and results. The audit has to cover all these spheres. Uh, the importance of audit or strategy audit that I have also in a way distinguished it from financial audit, the statutory audit that the auditors do, and I have established strategy audit as more demanding on the competencies of the uh, chartered accountants, and mere convenience with the taxation and financial accounting will not, kind of make you good strategy audit professionals, right? Uh, in terms of its importance or emphasis, as you can see in this matrix, it allows the practice of what is called MBE, management by exception. The exception principle, it derives from that Peter principle, 80-20 principle, that we have spent so much time, for example, defining what is strategic and what is not, right? So this strategy audit allows you to focus on strategic aspects of business's performance, and to highlight how these strategic aspects are different from the non-strategic aspects. We have created this matrix for you, and this we have it's a very simplified kind of a matrix, 2x2 matrix, based upon two criteria. One is whether the problem is acute or less acute, and in terms of the importance for your kind of pervasiveness, that's the another dimension. So as you can see, the problems that are both acute and important in my northwest corner, these represent crisis, because these require quick measures of great consequence. Recently in Surat, a fire broke out in the ONGC gas pipeline. Now this is a crisis, and this crisis has to be immediately acted upon, and if not managed properly, it will have very serious implications, for the company. So this is called crisis management, right? Crisis management. Then, in the moving on with the problems that are acute, but they are not as important. For example, in the course of your implementation of strategy, you come across certain unusual, situations. A particular customer, for example, who is, which is very, whose, business is business to you, will have a, implication for the company as a whole. So, and if he is demanding, demanding credit, whereas the industry practice, your competitors have been mostly selling on cash basis, right? So here you can follow the tactics of, credit sale to woo the customers, because you are penetrating a market. So to woo the customers away from the competitors who are selling on cash basis, you sell on a credit basis, and take away a chunk of the market share from them. The tactical maneuvering of the firm. The other day, somebody asked me, what are the various penetration strategies? It is not only price penetration. No, the penetration is also terms of conditions of sale penetration, right? Buy now and pay later. That's another tactical decision, is it not? And uh, therefore, many car manufacturers during this COVID pandemic have come with the offers of taking home the car now by paying a small down payment and paying it, in the next year, and so on and so forth. This is called a tactical, kind of a planning. Operatives, you understand. Strategy audit by focusing only on the problems that require, a kind of a carefully planned system of measure, causing significant changes, allows you to focus on that. Mind you, it is not that crises do not have to be met, tactics don't have to be drawn, and operations don't matter. No. But here it's the question of focus and emphasis that strategy audit allows you to focus only on the strategic front. Again, it goes to the core of the definition of strategy itself and the question, what is strategic and what is not strategic? So I hope the couple of slides that I have especially prepared for you, and as you can see, again in repetition of my earlier slides, because repetition at times becomes important, especially when the concept is new, so that it internalizes. The concept internalization happens. Same concept elaborated differently in a different graphic, external and internal. And as you can see, that the whole issue of audit quality, how good is your strategy audit, depends upon whether benchmarks of performance that you use are best in class, whether your audit enables the firm to gain prominence, it allows the firm to addressing change and complexity via innovation, and assume a leadership role. And within the organization, it creates a culture of team learning, and outperforming. So, as I had said, turnaround strategy, Sanjay, I really do not know, because to be very honest, acquisition of own assets through the process of IBC insolvency, because I consider this practice as a practice of questionable ethics to my mind, and therefore personally I am not agreeable to this idea. But yes, this is a type of maneuver the companies can do. In fact, this reminds me of an earlier mechanism. Your generation would not have heard of this mechanism. It was called BIFR, Board of Industrial and Financial Reconstruction. And this board for industrial and financial, I'm not talking of strategy audit at the moment, lest it should, kind of cause a drift in, your minds. I will responding to Sanjay's question of insolvency and bankruptcy code that I refer to, while looking at the strategy of the content of the strategy of retrenchment, for example. There used to be a board for industrial and financial reconstruction, and this board gained, kind of a prominence and popularity in view of what is called industrial sickness in India. Now one does not talk much about industrial sickness in India because so much deindustrialization has already taken place. But at that time, it was very important. And people used to say, going sick is a good business. So in a way, Sanjay, response to your question, that yes, it can be a strategy. Because strategy is also a ploy in Mintzberg's classification. Strategy is not only a plan, it is also a perspective, it is also a ploy. It is a ploy that you declare yourself insolvent and then buy back those assets and go on doing this. Anyways, the other day, I in my last introduction, I talked about Tom Peters, right? In search of excellence, and these 7 S's of excellent organizations, that Tom Peters identified through their research of top companies in the world. And as you can see, look at this diamond-like figure that the top 3 are referred to as the hard S's of strategy, and the bottom 3 are referred to as the soft S's of strategy of excellent organizations. And the nucleus is the shared values. So when I say strategy audit, now that's another way of defining it. Strategy audit is an examination of not only the strategy, but structure and systems and processes of an organization, but also the skills, staff, and leadership styles, and more importantly, the shared values within an organization. That's another definition of strategy audit. And what it does is that it aligns the idea of audit with the idea of excellent organizing. So, as I said, audit is needed not for its own sake, but for the sake of germinating the essentials of an excellent organization in the strategy management process. So, in a way, I have given you 2 different approaches to defining a strategy audit. And in the process, I have also elaborated the scope of strategy audit. And those who might have joined me late, I wish to emphasize that the concept is, not as popular today as it was when it was first introduced. However, and as I said, we'll talk about governance audit these days more than strategy audit, and strategy audit becomes a part of the governance audit, right? So that's the point that I wanted to make. But however, even from the examination point of view, I have fairly in-depth elaborated this concept, concerns, and elements of strategy audit. And I'll be very happy to take the questions as these come along. So ultimately, the idea of strategy audit is, again, this takes us to the basics of the first step in strategy management, which is called gap analysis. The gap between where we are or where we are likely to go with the current strategy and where we aspire to be. So this strategy audit will, not explain, will tell the extent of this gap, and might also therefore, point to the the risks. The other day we talked about how the businesses get toppled. So the risks inherent with the inherent prevalent strategy of the organization. It's a very simple diagram, two-dimensional diagram, linking the time and revenue in the gap analysis, actual progression and potential performance, or the aspired performance, we can call it. But I would like to hear from you uh, in the context of strategy audit generally, specifically and generally in the case of strategy management. Is it, as you can see, the intercept here is common, the current state intercept is common. Is it only a matter of slope, that is a change in the slope, or is it a matter of intercept as well? Scaling up. When it comes to strategy audit or superior strategy performance, I would like to hear it from you, and it will be an interesting exercise for you to engage yourselves in. So I can put it on the test drive. So if I am saying strategy audit is about examination of the content, process, and context of the strategy with a view to ensuring that organization is on course to achieving superior performance. So this gap analysis, is it only a matter of slope, that you change the slope? You can see you are on the current state, and one slope takes you to actual progression and the other slope takes you to potential performance. Is it only a matter of slope, or it's a matter of intercept as well? And I hope you guys know the difference between slope and the intercept. Any observations? I can't see any observations as of now. Anyone? Okay, your responses will keep coming, and I will be responding to your responses in the due course of time. But I hope my question is clear, that if I am looking at strategy audit, kind of, it's also a matter of intercept as well. Radha has got it bang on. Yeah. So it must be able to, kind of bring about a radical transformation in my future and the fate of my company. Yes, that's a smart answer, Radha. Thank you so much. That also assures us that, okay, we are reaching you. You are able to comprehend. We are able to make ourselves understandable, comprehensible. So that. Now I have taken a kind of a case scenario of the emergence of the idea of transnational corporations, and I have taken this input from Bartlett and Ghoshal that I have been talking about, in the course of my conversations with you. The challenge here is, the so-called economies of scale and efficiency, and the goal of flexibility and appealing to the customizing to the local markets. And transnational corporations, kind of traverse this particular, kind of path via an integration process. But the idea of transnational corporation itself is a rather late development, and that we come across these terms as multinational, international, global, and transnational corporations. How are these different? And as I said, the strategy audit, for example, will enable us to understand our internationalization mindset, how we um, how we are poised to embark upon the firm internationalization in the context of that gap analysis that we have talked about. I have developed 3, 4 slides on it, which I will quickly traverse, because my idea here is not to explain firm internationalization, but my idea is to explain how strategy audit can help you understand your internationalization motives and belief systems. Because the audit will also, bring into focus the corporate belief system, uh, because we have to check whether my beliefs kind of put a limit on my growth and my performance. Is it not? So you know that multinational company means multi-domestic company, uh, a company that operates in the various host countries. Uh, Okay, Vaishnavi is correct. Linear. And again, you know that linearity, Vaishnavi says, slope and intercept are both important due to their linear relation. Again, linearity is an assumption. In strategy, nothing is linear. Is it not? It's very turbulent. But this linear equation, what you call, is just a simplified model of strategy. So multinational means multi-domestic company. And European companies have been particularly following this strategy. And as you can see in the last examples, Unilever, Philips, and Nestle, all these are European companies and following this. And look at the internationalization strategy. US companies such as Kraft, Pfizer, and Procter and Gamble and GE, these have been following internationalization strategy, wherein home innovations are taken to the world, right? Uh, in that lagged product life cycle, the international product life cycle that I talked about in one of my interactions with you. So a product may be obsolete in your home country. You take it to the new country. It's in the introduction stage at the new host, right? This is what the US companies have been doing. Uh, so internationalization belief system. What is the underlying belief system? I'll come to it in a short while from now, and that will be very interesting for you. The global is about global economies of scale, and here the model is that of exports, right? So, for example, Japan only exports. Even when it is importing, it is actually exporting. Why? Because it imports to the import houses located in other countries, right? So all the companies are Japanese. So in a way, I have given you the three mindsets: European mindset, I have given you the Japanese mindset, and I have given you the American mindset, right? But transnational is an relatively, as I said, new area. This is a kind of a mindset wherein you look at thinking global and acting local kind of a mindset, right? And I have put this on. I will not talk about this because I complicate the matter a bit. I will come to this slide because that will give you even more. You know, in extreme, I can be ethnocentric or polycentric. Ethnocentric man, I believe that you know. My country is better, my products are better than the rest of the world. And therefore, I follow this ethnocentric approach. And polycentric approach means this the typical European strategy that you have to localize it. So you have to create multi-domestic, kind of a corporation. You have to localize your content very much. And regional centric and geocentric are, in a way. On the other extreme is geocentric, wherein geocentric becomes a kind of a compromise between ethno and polycentric. So this is a Plummett's typology of firm internationalization strategy. Uh, uh, I emphasize that these are the mindsets. These are the mindsets. So the strategy audit helps you explore your mindset. What is your mindset? For example, an ethnocentric firm will focus more on exports, whereas a polycentric firm will like to set up wholly owned subsidiaries in other countries and integrate with the local markets, very well on ground. And if you do not, then you are in trouble. Now, for example, McDonald's is an American company, everybody knows. Initially, they faced difficulty over here, but then they learned very fast. Same is true of Procter and Gamble. In fact, if you look in the FMCG sector, P&G was nowhere close to Hindustan Lever. It dominated the Indian market scenario. Why? Because it followed the polycentric approach. But Americans, thought of internationalization strategy, wherein they said that okay, our products will be introduced in the other markets along the product life cycle. But the Americans have been fast learners also. Let us give a credit to them. And with P&G, which was nowhere close to HUL, is now almost neck and neck with the Liver. They have localized, considerably, and they have set up their distribution system as good as that of HUL. That's how they are doing it. In fact, business is the game of learning only. You have to learn, and you have to learn very fast. You have to unlearn very fast, and you have to relearn, very fast. So, as I said, my objective here is not to kind of teach firm internationalization process, but you have to emphasize that strategic audit, enables you to review your own mindset. And as I said, the prevalent mindset now is, thinking global and acting local. Now, question is whether we have this mindset or not. Strategy audit should enable. In fact, strategy auditor might develop a questionnaire, for example, addressed to the top management team that is involved in the strategic management process, and through this, it may it may coalesce the information about their mindset. And in fact, it might even recommend that, sorry, the present team will not take the organization forward. We need to bring in a new team to take the company ahead. That is the power of strategy audit. So therefore, I spent nearly 35 minutes or 40 minutes on this concept of strategy audit as a part of your syllabus, and I hope that I have been able to communicate to you not only the essential elements of strategy audit or the definition and scope of strategy audit, but also its underlying, kind of a philosophy and the power, as I said, because the audit will bring about the managerial inadequacies or adequacies. And the independence of auditor, your auditing experts, will lie in the fact that they should be able to state whether the company in future, whether the present management is capable of leading the company in the future. Right? So, in a way, I have also hinted who will conduct this strategy audit? Already I have said, the conventional chartered accountants may not be able to conduct the strategy audit. We need strategy audit experts who have deep experience in the strategic, firm strategy, and they have to be conducting this audit. The question: this audit is internal or external? Uh, Prima facie, it appears to be an internal audit, but check it from me. Uh, it will be worth kind of investing in an external strategy audit, because an independent audit into the strategy management of the firm. I will give you my concluding observation on the importance of the strategy audit, and in fact, uh, importance of the strategy management itself, with reference to a study of which I was a part nearly 20-25 years ago. And this was the study, first of its kind in India, on strategic management in Indian enterprises. It was a ICSR SSR sponsored project, and we developed a questionnaire to assess the strategic management readiness or engagement of the firms, and we sent it to all the, I think, NSE listed companies. And as happens, some companies responded, others did not. So we classified the companies into responding companies and the non-responding companies. And we took a position that the responding companies are into strategic management and the non-responding companies are not into strategy. But if they were, they would have happily taken our survey. If that was the kind of logic. And then we conducted the performance appraisal of the firms, and we realized that there were significant performance differences between the responding firms and the non-responding firms. Today, with hindsight, I can relate the findings of my research or our research to the implication that I am suggesting of strategy audit. Strategy audit will tell whether there is a robust system of strategic management in place within the firm, and as I said, its recommendation may even include the recommendation as to whether the present or the incumbent management is capable of taking the company into the future. So that is what the BCG Saikat is a business consulting firm, definitely. And I'm sure they would be into strategy audit also. And as I said, the concept has now lost its sheen. Nowadays we talk about governance auditing and so on. So by whatever name, so they would be probably doing this. In fact, even Accenture would be doing it. But as I said, you need fairly experienced and people to conduct the strategy audit. Ordinary mortal chartered accountants, with due respect, will not be able to do it, because strategy goes beyond matrix, right? So that's what is suggested here. Radha asked this question earlier also. So you are a strategist. Very humbly, I am only an academic with my little understanding of the subject of management. So I have never had an opportunity to do consulting area of strategy. So as of now, I am only a so-called theoretician, an academician, not a practitioner. But of course, through research and so on, one develops certain ideas and insights which can be applied, in the consulting spheres too. Um, no more of this, because I said it is not a kind of a class on firm internationalization. I move to the next element in your syllabus, that is the re-engineering of the business processes, or BPR, business process re-engineering. And I'll be devoting maybe another 30-35 minutes on this concept to highlight that in the process of strategy implementation and evaluation, how this re-engineering, it's a concept of the mid 80s and early 1990s. Uh, Continues to be relevant even today, especially with respect to digital re-engineering of the business processes. So technology is an important element of this re-engineering process. Although, very interestingly, this idea, there are levels of re-engineering, but hearsay means there are management gossips also, is it not? Every discipline has its folklore. they कहते हैं कहानियां होती हैं हर एक industry. So there are stories about this re-engineering, and one of the tweaking and twisting of the concept is uh, reverse engineering. Please tell if you have heard of this idea of reverse engineering. Quickly, if you can, so that will make our interaction even more lively and interesting. Whether you have heard of this concept of reverse engineering. Okay, responses will come. It goes like this. Now, I will not name the countries because that will not be appropriate in today's context. But no, it so happened that a plane, a fighter plane of some country drifted into the airspace of another country. So I can call it country X and country Y, right? So fighter plane of country X drifted into the airspace of country Y. Now the country Y's defense system and defense, fighter planes ensured that the plane is forced landed into their territory. Whose territory? Territory Y. And as per the diplomatic protocol, they informed country X that, look, your plane had drifted into our territory and we have landed it here. We will, do the kind of examination of your pilot, etc., and to understand the things, and then we will send it back. So, likewise, what they did, that they kept the plane for about 24 hours or so. And then, as per the diplomatic protocols, they sent the aircraft and, of course, the airmen back to the country X. Okay. Like Vaishnavi says, it's heard, Radha says no, reverse engineering. Saikat says heard, but no understand much. Okay, Ritesh also. Yeah, so the story will therefore fascinate you. Country Y sent the machine money aircraft and the men, that is the airmen, back to country X as per the diplomatic protocol. But you see, the interesting part is that within 24 hours time, they reverse engineered. That means they opened the entire machine and then they screwed it back, and in the process learned the technology, every bit of the technology of that particular fighter plane. And within a month's time, they rolled out those fighter planes, maybe better versions thereof, from their own factories. This is called reverse engineering. So, uh, uh, yeah, and Sanjay, you are correct. This reverse engineering is done to see the design of the products. So here I have given you the example from defense, right? So you can understand. So the idea of re-engineering has, kind of emerged from there. But of course, it is a much broader idea that I will be developing in the next 25 to 30 minutes with you, and I'll be bringing in some case studies, in caselets and interesting anecdotes in the process. Okay, on to the features of the business process re-engineering. In fact, everything is important in this business, the meaning of process and the meaning of re-engineering. All the three words need to be, kind of interpreted. But here I am using these two words simultaneously. What is the meaning of a business process? What is the meaning of a? Now, in order, interestingly, also, in case you are from commerce background, you would have done in class 12, for example, a chapter on scientific management, right? To my mind, business process re-engineering is a modern day application of the classical scientific management, right? So I often cite it as, and in fact, BPO, that is the business process outsourcing, also as an example of the modern day application of the idea of scientific management. And as I talk to you, you will understand what I'm trying to say, provided that scientific management is clear to you. The scientific management, the key element of scientific management was work study. Remember, work study included time and motion study and fatigue study, right? So the work study, and in fact, incidentally, work became the object of study probably for the first time in human history, right? Pursuant to scientific management. Okay. Now, a business process has to be specific. That means we should be able to define that this is the input of the process, this is the throughput of the process, and this is the output of the process. One. Then the processes within the process, or the steps within the process, must be in order. So the business process must consist of activities that are sequenced. For example, for material requisition process, right? In a factory, in operations management, even in cost accounting, you would have done this, Material requisition originates from a particular department, it is evaluated, it is recommended, and then purchase order is issued, and so on and so forth, right? So this is how it must have an order. And the business process must have a definite customer. The customer can be internal customer or external customer, right? Because here, if I am in the purchase department, my customer will be my sister department who is requisition for the purchase of, when you say, for example, work from home equipment. If I am a company, and now you know that Google, for example, gave $1,000 to each of its employees to enable them to buy work from home furniture, right? And other companies also follow the suit. They gave allowances to the employees to buy work from home. So as I said, here the customers are my employees or my other departments. So the customers can be internal customers, they can be external customers. Business process. So business process must have customers. And the process is integral, and that is the definition of strategy also. It is integrated. The process is needed not for its own sake, but for the sake of attainment of the enterprise objectives, right? So the integral process is integral. That is, it is embedded in an organization's grand design. It is embedded in the organizational strategy. Then only it will contribute to objectives of the strategy, is it not? It has to be embedded and integral part of your strategy formulation. And definitely it should add value. Otherwise, what's the point of fun of re-engineering it? Is it not? And your re-engineering process might enable it to add greater value, I mean to say. And value can be in terms of reduction in cost or inconvenience, or it could be enhancement of revenue and profitability and margins, right? So I hope this slide, again, to my mind, it's an important slide for you because it clarifies bit by bit detail of a business process. I think my other slides are more application oriented than semantics or meaning oriented. Okay, any questions so far? No. Second, I'm happy that you understand the concept. Sanjay says design, the design products, yeah, definitely, the reverse engineering part. Okay, now, as I've already said, that it's a business process has defined inputs and the defined output. Here I have taken the case of an insurance company. An insurance company, be it life or be it general insurance, claim settlement procedure is it's a business process, and satisfaction of the clients matters a lot because especially you would have seen in your medical insurance, if you are made to run from pillar to post to get the company to reimburse your health expenses, that can be nightmarish, and that can really spoil the relationship between the insured and the insurer, is it not? So therefore it is very important to study and improve this process, right? However, the screen now clarifies the difference between not difference, the essential of business process as comprising distinct input and distinct output, right? The output of the evaluation process will be either the claim is accepted or claim is rejected. And to the extent you are, kind of able to master this process, or you can avail the services of some outsourcing partner on this to mitigate complaints of your clients and to increase the efficiency of the evaluation process. That becomes the a kind of fallout of the recommendation of the client. I hope I am clear on this. Forget this at the moment. Take more, kind of examples because as you can see that the process of business process engineering consists of this. This is an original diagram taken from Michael Haber, and as you can see that the business process re-engineering begins with the understanding of the customer needs. Mind you, I have already clarified that the customer can be internal customer or it can be an external customer. And look at the outset and benchmark competitors. Our claim settlement time is 3 days. What is the best in class time? Oh, within 24 hours, within 10 hours, within 4 hours. That means we there's a scope, there's a gap in performance to the extent of so much improvement, right? So the business process re-engineering will begin with an understanding or determination of customer needs. These customers can be internal customers, these can be external customers. And we need to benchmark. And because this benchmarking will enable us to identify the performance gap. Oh, I cannot be as good as that company, but at least I should aspire to be at par with this company, right? So you will have to set your vision and goal. And therefore, either you will modify the process or you will replace the process with another process, right? And evaluate the results and measure and maybe recycle. So again, this diagram is critical to the understanding of business process re-engineering. So, as I said, that the process will lead to kind of radical improvement. Look at any industry: pharmaceutical, chemical, leather industry, even textile industry. It results in a lot of wastewater, right? And then it passes through the EFT, the common effluent treatment plant. EFT can be internal, or it can be a pooled effluent treatment plant, and results to water positive outcomes, fresh water and the byproducts. So this that means I have to understand textile manufacturing process. I have to understand leather manufacturing process, or the pharmaceutical process, or the fertilizers making process. I have to understand, what contributes to the waste, how that waste is, presently treated, and because it has not been treated well, there have been environmental pollution laws. We have been slapped with penalties, and our reputation, has gone down considerably. Even we have been threatened with lockdown on this count. So now the DPR has to come in, into interplay, and ensure that we take recourse to the processes whereby we are able to re-engineer the products and thereby add value to the company. So again, it is a very important diagram highlighting the kind of importance of the business process re-engineering. As I said, the last 2-3 slides have been application slides, and I'm sure these slides build onto your study material and help you gain greater clarity, and give you lots of examples, therefore, to quote on this. Did I mention that in any situation of business process engineering, technology plays a very important role, and because the word of not because of the word re-engineering or engineering, because technology can solve several issues and bring about a radical improvement in. An example which I often give of withdrawing money from a bank account, savings bank account. It was such a cumbersome process. You will go to a bank counter and you'll present your check, and you will be asked to go to another counter where they will verify whether your account has the enough balance or not. Then you will be sent to another counter. In possibility, your generation would not have gone through this. I have gone through this, your parental generation would have gone through this. Then you will go to another counter where they will verify your signatures. Then you will be sent back to the first counter. They will give you a brass coupon, which you will take to the teller. and you will be able to take your money. Such a cumbersome process. My money, I have to withdraw it, and the process takes ages to complete. Grossly dissatisfying and annoying process. Comes in core banking. I hope core banking was again a radical, kind of, and you could present the check only to the branch where you had the account, right? Comes in core banking. Uh, Finacle is Infosys product, and I think the Tata Consultancy also have a product on core banking, which uh, which which um, ECS has given to whom? To State Bank of India, right? Which State Bank of India is using. So the thing is that core banking allowed now for you to present your check to the branch closest to you. One. Then core banking also allowed you to single window clearance system, that you will reach a particular counter, all your processes will be done there, and on the same counter you will be given money up to a certain limit. Of course, if it's a big amount, then you might have to go to teller. So, how this technology has simplified. ATM is another, next level improvement. And, now the internet banking and the Google Pay and all that, these are other, improvements in the business process. And all the backend is automated, and so on. So therefore, technology is always an kind of an integral part of any kind of re-engineering of the business processes. Radha has given an example of the Akshay Patra initiative by ISKCON Temple to serve the meals to many schools, because midday meals scheme is implemented countrywide, and there were lots of problems with the meals schools served. At times you will get lizards and or squirrels in the food. Food quality would be bad, and so on and so forth. And so what you do is that you bring in an expert who have got modern kitchens and quality surveillance systems to ensure that quality meals are supplied to the municipality schools all over India, wherever, of course, Akshay Patra temples are there. So technology is not only machines. Technology is what the way you do the thing. Method improvement. Remember, scientific management was about method study. Improvement in the method, you can about a radical transformation in the satisfaction of the customers. That is where the utility of business process engineering lies. So I was talking about this diagram, which is critical. Now, certain case studies, and you see the radical improvement that the re-engineering comes in. Mahindra and Mahindra, of course, the last 10, 15 years, they have emerged like anything in the automotive sector. I'm talking about cars and SUV sector. Of course, tractors, etc., have been their core kind of a competence. And as you can see that earlier 100 offices produced 35 engines a day. You know, as against 1200 employees producing 70 engines in the pre-BPR days. So you see that, and this allowed the company to give wage hike to the workers. This also took care of their trade union problems, industrial relations problems, and because the benefit of productivity can be shared with the workers, is it not? And as you can see that Anand Mahindra is on record saying that BPR did miracles to to their performance, right? This is again an interesting story I will talk about a short while from now, uh, about the improvement in the payment process to the suppliers uh, at Ford Motors. And so there's a purchasing department who gives the purchase order to the supplier who supplies the goods. Along with the goods, documents are received, and copy of the purchase order is matched with the goods received, and then invoice uh, is processed for payment. And it took long time, and there were 500 account payable clerks in Ford Motors just for processing of the purchase orders. Imagine Ford Motors had 500 clerks for processing the purchase orders. 4 are now little bit of technology. So there is a database of the suppliers. The order is routed. Likewise, a bill is generated. Payments are made, and they have been able to cut the accounts payable staff by 75%. That means if they had 500 employees, earlier they only had about 100 employees to do that. And accuracy and the speed of bill processing, and thereby suppliers' engagement and suppliers' delight, kind of increased tremendously. The story I will tell in a short while from now about the Ford Motors. The next topic is, of course, benchmarking that we need to pick up. The story about the Ford Motors, in the business process re-engineering. As I mentioned, was also a study on is also a study on benchmarking with Toyota. So when the Ford Motor CEO met the Toyota counterpart, and in the course they were just saying that we have so many clerks we had so many clerks doing purchase procedure, and we implemented BPR and we cut it down to about 100. The Toyota executive looked at you, 100? We just have about 10. So you can see the benchmark is so high. The Japanese accomplished it with just about 10 employees. In an automobile industry, whose supply chain is global. Different components are manufactured in different parts of the world, and then cars are manufactured in the different parts of the world, and the cars are sold in the different parts of the world. It's an integrated. It is a transnationalization, of the automotive industry. And in such a scenario, as compared to 100 at Ford, you are doing the same work with the 10 people, 10 employees. That's the kind of benchmark. And that's where I had said that benchmarking is the first step in the business process re-engineering, right? Because you have to see, the best around you, and then set a vision and goal for the improvement that you are, kind of trying to aim at. Um, so, as I said, that uh, in BPR, the benefits realized by Ford do not compare with what Toyota accomplished. Uh, and there's a bigger story to this. As you can see, did you know uh, Japanese car service centers inspired American car manufacturers? I will be taking it up in about 5 minutes time. So I'll be taking a break and will be soon meeting again after the break on this particular thing and to take our discussion even further. हाँ तो मैं उसको अभी प्ले पे डाल दिया हूँ So, welcome back. We are on the same slide, and as I posited, Japanese car service centers inspired American car manufacturers. It is again a folklore, and it's an important folklore in strategic management. In fact, probably the genesis of strategic management. As I said the other day uh, in my first interaction with you, that the strategic management or strategic planning evolved when some serious threat from Japanese companies started coming to the American counterparts and the European counterparts. Otherwise, they enjoy their monopoly situation. And as I had said, either in monopoly or in perfect competition, there's little motivation for strategic behavior. So the strategy and strategic management derives its justification in imperfect market forms, right? Where you try to outsmart your competitors, and outperform your competitors on whatever performance criteria that you might talk about. So the story and the folklore goes like this: that uh, Japanese started making automotives and the cars much later than they were importing cars from America. So, in one of the business visits, this American car manufacturer CEO visits Japan and their service centers, and he was taken aback to see the kind of equipment the service center had. They were using pneumatic machine tools. The kind of machine tools they use in Formula One cars. When the car stops, immediately the tire is taken off, and then the new one is restored within in a jiffy, and then it's back on track. So the Japanese were using pneumatic machine tools, and their service centers were plush, uh, and the American CEO quipped, "We don't have factories like this. Your service centers are much better than our factories." And then the Japanese counterpart, kind of responds by saying that, "Look, we do not like American cars, but we are not manufacturing cars anyways. So what we have to do is that we have to modify the imported cars substantially to suit the Japanese customers." And that's why we have to have such well-equipped machine shops to be able to, kind of redesign as if or redo your cars to suit our markets. So the, the thing is that their facilities, their service center facilities, inspired the manufacturers. They came back home and then improved their facilities. But of course, rest is the history. Japanese started manufacturing the cars and they met Americans, uh, you know, uh, at their home turf because they were exporting the cars now to America. Is it not? So, although this BPR and benchmarking and audit, etc., are put as separate elements in the implementation and control process, need to understand that all these are integral parts of the same phenomenon, and therefore, in this particular case, I have categorically integrated the BPR with the benchmarking uh, concept that is there in your syllabus. Okay? Uh, See, in a way, we are now nearing the conclusion of the discussion of this particular chapter. We started with the interrelationship between strategy formulation and implementation, and we are now at benchmarking. I would be very happy to pick up any question you have from this chapter. However, for now and for at least 10 to 15 minutes now onto this benchmarking business. And then because we had highlighted the fact that benchmarking is step number one in any attempt at business process. Uh, if this the benchmarking itself is very important because with whom you are comparing the performance, with what you are comparing the performance. So Americans said we had 1,000 employees and now we are left with 100. See what major improvement we have brought up. But if you compare that 100 with Japan, 10, you know that there is still a gap of 90%. Is it not? So, or 10 times there is a gap. Is it not? So, likewise, how do the international vis-a-vis certified public accountants or similar professionals in other locations best of the best? That also tells class, is it not? And ultimate is like Sergei Bubka, whose record was recently broken in pole vault. After so many years, 20 years, I think, or so, that you are improving your own record. You are competing with yourself in bringing about a radical improvement and continuous improvement in your performance, right? So that way. So benchmarking, as I said, is inherent in the idea of business process re-engineering, although it is shown separately in your syllabus. So I hope the point is clear. So now on to some more discussion on this benchmarking. And as you can see that this benchmarking can be internal and can be external. I will pick up simpler examples also in the process. If you would have done a course on management accounting or strategic management accounting, for sure, because you're now in intermediate, hopefully, or you know that there's famous decision situation of make or buy. A particular component is being manufactured internally also, that is the internal market, and then externally also, external supplier. Now you have to take a call whether you will buy the component from the internal, kind of a seller or from the, external seller. So your benchmarking can be internal and external, and this benchmarking is occurs at various levels: process benchmarking, performance benchmarking, and strategic benchmarking. Remember my first slide yesterday, that means when we met on 28th, was this. I will play that slide once again for you so that you understand what I am trying to say here. Of course, I have taken up this very thoroughly, strategic change and transformation. Strategic process re-engineering. So if I realize that my strategy is being formulated at headquarters, and I am a multinational company, and then I am expected to implement this strategy locally, in a host country, and host country peculiarities are impacting the effectiveness of this strategy, then I have to report it to my bosses in the headquarters and say, look, unless and until you allow us to participate in the strategy formulation process, it will be very difficult for the company to achieve the objectives, is it not? So you need to re-engineer the process. So from the headquarter to the subsidiary, host country subsidiary, maybe you have to reverse it from the subsidiary to the headquarter, because different subsidiaries will bring in the insights from the different markets and the different locations to the headquarter, and maybe they will engage in a brainstorming or a conversation with the headquarters team to evolve a strategy, which is credible and which can be implemented, locally. So when I'm talking about benchmarking, therefore, I need to need to benchmark even my strategy formulation process, strategic management process. How good is my strategic management process vis-a-vis the process elsewhere? So I hope the point is well taken, and I have been able to communicate this to you adequately well. So going back to the slide on the benchmarking that we had here, yeah. I will also give you another example of internal benchmarking. This is also, for example, applicable to international firms. That you might, for example, look at your manufacturing costs, and you suppose you have factories in different locations, and then you may benchmark. Let us forget cost for the moment. Quality, for example, a factory in location X is doing Six Sigma. I hope you are aware of Six Sigma. Please type back. You are so that I know that you are aware of the term that I am using. Are you aware of Six Sigma, 12 Sigma, and so on and so forth? Hmm? Okay, your responses will come in the course of the class. So a particular factory in a particular location is at Six Sigma, whereas the another factory in a different location is 12 Sigma. So here the benchmarking is that, oh, this factory can attain 12 Sigma, why can't you? So to ensure the consistency of performance. And the benchmark is internal because it is within the same form. But if it is extra or external, then it becomes an external benchmarking. So I hope the distinction and the dichotomy between internal benchmarking and external benchmarking is clear. Likewise, even at the functional level, performance of one team versus performance of another team, right? So maybe you will see what is the best performing team, and what is the average performing team, what are the below average performing teams, and then in the MBO cycle, what is called management by objective cycle, you sit with the teams and the groups, and then encourage them and motivate them to follow the benchmark set by the other team. Is it not? So, okay. Uh, Sigma, yeah. Manisha is aware, Rahul Sundar is aware. Some of you are not aware. Okay. Six Sigma, Sigma is standard deviation, right? Sigma is standard deviation. And in the normal curve, mean plus minus 3 sigma deviation, gives you 99% accuracy. But this 99% accuracy is such fallacious. 99% accuracy means if there are, 10,000 flights taking off and landing, every day, and that means, and 1% are crashing, you can imagine the kind of havoc this will play. So percentages do not matter, right? So 99% is bad. 99% is bad in business, is it not? So you look at, just as in finance, you look at basis points, right? So in quality, you look at sigma. Sigma is standard deviation from the standard, is it not? So 6 sigma is 1 in billion mistake. That is the kind of accuracy. By the way, our dabbawalas, whose business is under threat during the pandemic, they have suffered badly. In fact, they are going through some very bad times. They need our help. The dabbawala had, of course, 6 sigma so many years back. They had also attained 12 sigma accuracy, right? So and I use this concept of Six Sigma with respect to with respect to uh, benchmarking. And as I said, that if you are at Six Sigma and your competitor is at 12 Sigma, that's an external benchmark. Or one factory is at Six Sigma, another factory is 12 Sigma, that is the internal benchmark. So you have to benchmark, therefore, with reference to uh, performance of your kind of strategy, right? So the benchmarking is needed not only for performance, the ultimate output, I mean to say, right? You also, I have already elaborated this total quality when I talk about how can I attain a product quality when my design quality is bad? No, a product is as good as it is designed, is it not? Your technology, maybe even 3D printing, can do it to the minutest possible details of the design, but the design itself is faulty then. So therefore, I mean to say, input in design quality, input quality, throughput quality, and of course the output quality. All this matters. So therefore, this diagram, as I said, again, it is a very important diagram. I don't think I have taken it from your study material. I've taken it from elsewhere, I guess. This benchmarking, to my mind, is not only for the output of the process, but the process itself. And we have already seen that in the business process re-engineering, benchmarking was the first step, is it not? So the benchmarking is to be done for the processes and for the performance. And I have already amplified that we are here talking about strategic benchmarking, because strategic benchmarking is usually external, is it not? Because you are comparing with your competitors how well they are doing, and you wish to do better than them, is it not? The strategic benchmarking per se, by definition, is in a kind of but of course, strategic marketing benchmarking will be internal when your internal benchmarks are on an average better than your external benchmark, is it not? So you have to take this. I will give you another example of strategic benchmarking. Maybe I will draw it for you live so as to create even a better understanding, is it not? Mm, but before I draw it, as I can further elaborate this process with respect to, and we are talking about strategic benchmarking. We are talking about strategic objectives, the metrics, the benchmark performance, and the model of operational excellence, and then the measurement post, kind of implementation and the feedback. So this is again these two slides. This slide on types of benchmarking, and this slide on the process of benchmarking in a way are important for you to understand the concept. And as you can see that we begin with the question: what can take our organization to the next level of performance, and what metrics align to our strategic objectives, and how do we become world-class performance? For example, the industry standards. I'm sure you would have heard of what is called GMP. Have you heard of GMP? Good management practices, or currently good management practices. Uh, Now the pharma units have to be compliant with the GMP certifications. It's very difficult to attain, for an existing firm in an existing location. And we were doing a study and we realized that so many pharma companies are now shifting to Sikkim, because in Sikkim it is easier to adhere to the GMP standards, right? So, so the benchmarking, therefore, is an important, kind of a concept in strategy implementation evaluation. Because when you say control is about compelling the performance to conform to standard, the question is which standard, whose standard, right? And therefore, you know that there are standard setting bodies. ISO, for example, or organization is a standard setting body. These set up standards. At times, these standards tend to be minimum standards, and you have to look at best in class, is it not? So you have to look at the standards against which you would like to benchmark, or the standards that you would like to exceed, know, to create that delight in your customers. As I said, customers can be internal or external. So delight is when you are over performing, over delivering, uh, than the expectations. So benchmarking is about that. The process of benchmarking will include the steps. And as I said, I'll be doing a live kind of a live slide for you to understand this benchmarking and the implications of this benchmarking in strategic management and the philosophy of the organization. I think that will interest you even further. A minute, let me create a slide and then I'll come back to you on this. Okay, yeah. Um, I can design it like this. Just this explains, even the firm internationalization behavior also to, kind of, and yeah, I put it like this. I will simplify it. Now, for example, let us think of any performance standard, kind of quality standards. Suppose I can keep in mind the quality standards. It can be any standard, production standard, marketing standard, even the ethics standard or the institutional standards, law standards. I hope uh, this is visible to you, and because I'm doing it live, I can't do it while doing slideshow. I have enhanced uh, the font size, for example, home country standards. So I'm putting this slide in the context of firm internationalization because here I can dramatize the effects, even very well. Uh, and here, say, I can call these as host country This can be any standards. You can consider this as ethical standards also, right? Not an issue. Okay. Now, this again 2 cross 2 matrix gives you very interesting, kind of a insights into this benchmarking. And I hope this matrix is evidently loud enough, visible. I have put it on the slideshow. Now, this matrix gives you some important insights, with respect to benchmarking. And here I have taken, a generalized, kind of understanding of the standards. You can call this as an all-embracive concept: technical standards, human standards, and product market standards and factor market standards and whatever, right? Institutions, governance, all those things. Now, suppose I am in a country where the governance is low. Now, I would like to work in the countries. I aspire to work in the countries with the higher standards, or I would like to go to the countries with even lower standards than me, or as low standards as me. What is my benchmark? Is it not? So, as a producer, again, without disrespect to any country or any location, but just to highlight or dramatize the point. Uh, uh, I am a manufacturer or a business firm in a let us use the familiar terminology, in a developing country, right? Where there are certain standards, right? Now, I would like to export, I would like to grow in an underdeveloped country, or I would like to grow in a developed country. What is my standard? What is my benchmark? Do I aspire to reach to the developed country standards, right? Or am I happy in selling or in operating in the countries with the same or with the lower standards of performance? You know, so 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 therefore, benchmarking is a very interesting, as I said, concept embedded in the BPR. It is embedded in the strategy evaluation process, in any evaluation process, because any evaluation or any control, by definition, requires comparison of your performance with some standard. Now the question is, what standard is that? So if I am looking at my performance, it is like this. Suppose my son gets, say, bad percentage in a particular paper, and I say, "Oh, you have got so bad," but I have done better than the friends who have failed in this paper. The question is, what are you benchmarking your performance against, right? So, as a parent, I will tell why. And therefore, objective is to be, idealistically, we may say that our performance standards have to be high, and we should be aspiring for the high, that is the um, northeast corner quadrant of the matrix, right? So that means benchmarking is always aspirational. It should always be aspirational. Remember, C.K. Prahlad talks about the idea of core competence, and said that our aspiration, and he talks about strategic stretch. Remember, we did the distinction between strategic stretch and strategic fit. Stretch is about raising the bar, is doing better than how you have been doing, kind of hitherto, and therefore, kind of trying to catapult your organization from the semblance of mediocrity into a sphere of and constantly moving target of excellence, right? Even the best can be better, that kind of mindset, because that is what inspires the companies and the people to to keep on working hard, for the attainment and maintenance and redefinition of the standards. Likewise, even as professionals, I guess we need to continually work on the benchmarks and the standards, and try to achieve for the higher levels of performance in whatever sphere of work that we have chosen for ourselves. Now, with this, if you may, Paul, that we have arrived at the very first slide on this particular chapter, that on 28th September. So I had said that, from an examination perspective, or scholastic purposes, even this slide is okay to discriminate between strategy formulation and strategy implementation. However, it doesn't happen like this, and we have seen that constantly planning, implementation, and controlling are in a continuous loop, and everything is happening simultaneously. Not only that, even while I am implementing, I am planning, because I am taking a call on how to implement the strategy, and I am also generating and evaluating the feedback real time, or maybe ex post facto, on how well I am doing. And in the process, I am setting the benchmarks and the standards of uh, my performance. So, just to kind of assure myself and yourselves of the fact that we had embarked upon chapter with the fundamental understanding of the interrelationship between strategy formulation and implementation, wherein we saw that, putting it simplistically, it will appear that implementation proceeds from strategy formulation. That means it comes after strategy formulation, but their interrelationship is embedded fundamentally into the very definition of strategy. That is the that is the integrated, and what you call holistic plan, which is embedded in the context, which follows a process and which has a content of its own. And invariably, uh, my slides are not visible. Controls, are you there? There are. अच्छा, मैं इन शेयर है ना, दोबारा से करेंगे, है ना? तो Okay. Yeah, Radha, I have seen your question. Strategic change, Kurt Levin's change process. Definitely, I will go through it. I have time, I think about 13 minutes in this particular session. I will follow it up. No, so the point is that, as I said, mm, we begin with this fundamental understanding, and we thought that that dichotomous table in your chapter, will suffice as far as our understanding is concerned. But as I said, it is inherent to the very definition of strategy itself, with two counts with respect to comprehensive and integrated, the structure of it, and also the content, process, and context, kind of aspect of strategy formulation. That means even while implementing, I am concerned with the context, I am concerned with the process of implementation, and I'm also concerned with the content of implementation. And yes, we saw that any strategy chosen will trigger off a change process. And we asked this question, whether we are talking about change or transformation, and we kind of try to look at this matrix in terms of the four types of strategic change. And I have kind of elaborated and driven home the point that strategic change by definition tends to be transformational, because it is in sync with the definition of strategy as an integrated comprehensive plan. So it covers all the aspects of the organization, and of course, it is embedded in the context. So this what you call left, I mean to say, western quadrants, both the northwest and the southwest quadrants, capture the essence of strategic change as a transformation. Now I will be spending next 5-7 minutes to Radha's question. Vandana also expects me to be summarizing strategy audit. Okay, so I have got two things to kind of capture with this. But because I am on change at the moment, I will take next 5 minutes to focus on Radha's question. How Kurt Levin's change process can be brought into discussion over here. Um, I've got a couple of slides on this, but I think let me see if I can quickly move to the slides and kind of sound more convincing in terms of the content that I'm talking about on Kurt Levin. Quickly, let me catch up with the slides here. I think so. You know that the Kurt Levin's argument is about unfreezing. You cannot color the ice, frozen ice. You have to unfreeze it and then change it and then refreeze it. Now, this is the process that I have kind of adopted here to highlight that in strategy we need to work out what needs to change, is it not, and generating a passionate desire to change. Everybody, and that's where probably somebody asked me shared vision or vision shared. Everybody has to be on the same page. They should feel the necessity of bringing about this change, in the hope of improving the lives of the customers and even improving the lives of all other stakeholders, and the fate and the future of the company at large. So therefore, we have to look at this process in this way, and we have also to kind of understand that there will always be forces that will be driving the change, and they will be restraining the change. So Kurt Lewin also talks about the force field analysis through which the change occurs. So my submission therefore is this, that one, that strategy implementation per se necessitates change. When we talk, and the change is transformational in nature, And when we set out to change, there will always be forces that are driving it, and then they are restraining it, and we have to deal with these forces in the process of our implementation. You know that the restraining forces have to be neutralized, and the neutral forces have to be brought in favor, and the forces that are in favor have to be even kind of strengthened. So this is the kind of Kurt-Lewin framework that we follow in a strategic change process. I hope I have addressed to Radha's query. And then there was the query with respect to strategic audit. Now, as I said, a strategic audit is a systematic examination of the strategic context, strategy process, and strategy content with a view to elevating the organizational performance to the next level. And that benchmarking is inherent in the process of our aspirations for the superior performance. So I hope, therefore, I have been also able to respond to the query of Vandana on the strategy audit, is it not? And I have said this is the audit of the corporate level strategies. This is the audit of the business level strategies. This is the audit of the external influences. This is the audit of the internal capabilities. So that's how. So the very definition of strategy, if I prefix it with audit, that comes into a kind of interplay. And as I said, that the strategy audit, might kind of lead to the insights as to whether the current management is capable of preparing and taking the organization into the future. So I hope that is also clear. And now there are questions on TQM and Six Sigma. Six Sigma is one of the techniques. TQM is a philosophy, is it not? So total quality management refers to management not only of the output. You remember SQC, statistical quality control, what you call probability of defectives. So when I am able to reduce the probability of defectives to 6 sigma, 3.4 in 1 million, as somebody has pointed out, now that is the 6 sigma. But as I said, I am not only concerned with the defectives, the defective output, I am also interested in improving the process and even improving my inputs. The time is not there, otherwise I would have taken up a case study of Lebanon cheese, on this total quality management. And I think Mansha has answered it also herself, that it's a philosophy. Six Sigma is a methodology to reduce the defects. So I think I have been able to address most of the queries that have come. I will be sharing the slide, although I did not intend to take the Kurt-Levin's change process here. I will nevertheless, when I share the slides with you, I'll be sharing the entire slides with you, so that your kind of understanding is enhanced, and I will ensure that these slides reach you as well. Okay, I'm not able to reach my slides. Just a minute, if I. But if there are, in the meanwhile, if there are any queries, you are most welcome to kind of pose those queries. Somehow I'm not able to reach my slideshow. Yeah, but if there's any issue, you're most welcome to raise, and I'll be too happy to respond. But summing up, I would say that we begin with the idea of a relationship between formulation and implementation. And we discussed this relationship. Excuse me. Uh, this relationship to the very core definition of uh, to the core definition of strategy itself, and we saw that this relationship is much deeper than the tabular comparison of the terms. And then we saw that implementation per se will necessitate change, and we said that this change is kind of transformational, again in sync with the definition of the strategy, because it talks about unified, integrated, and comprehensive plan. So strategic change by definition, therefore, is transformational, rather than a minor tinkering here and there. And we have followed up it with the force field analysis and Kurt Levin's unfreezing, changing, and refreezing process. And then we said that in order to bring about this particular change, and we need to constantly evaluate the performance. That's how strategic control comes into the kind of discussion. And remember, I distinguish between what is called control and controls, right? I have distinguished between these terms. And the moment we talk about control, the issue of benchmarking, kind of comes in, and that's where we did a comprehensive discussion on this benchmarking. And we saw that benchmarking was inherent in the BPR, business process re-engineering, because we need to kind of work out the expectations of our internal and external customers. I think with this, I will rest my discussion. Thank you so much for participating in. Controls, can we sign off? Controls, can we sign off? Controls, can we sign off, please?